Time now for Business with Kate Moody. Kate, good to see you.
Hi, Monty.
We know that Emmanuel Macron announced these restrictions tonight, and this is an ongoing process, but what kind of effect is this going to have on the economy?
Well, the French Finance Ministry has this evening said that these new lockdowns will see 150,000 businesses closed nationwide at an estimated cost of 11 billion euros. Economic activity could slump by around 18%. That's around half of the losses that were seen this time a year ago. Now, in terms of financial aid, French parents who will have to look after their children and cannot work from home will be covered by the government's ongoing furlough scheme, which has been paying a percentage of salaries for workers in a number of badly affected sectors for over a year. All other emergency aid measures already in place will be extended as well. That'll cover parents, independent or self-employed workers and businesses, and it includes state-backed loans, grants from a solidarity fund, a delay in some payroll taxes, and those furlough payments. Earlier this week, the government announced a further 200 million euros in aid for some 35,000 businesses in the clothing, shoe and sportswear sectors, those shops that are still deemed non-essential and which won't be able to open for at least the coming month all across France. U.S. President Joe Biden is outlining a sweeping $2 trillion plan to revitalize America's infrastructure and invest in communities and workers. So just what is the state of America's infrastructure? Ellen Gainsford has been finding out.
It's the largest economy in the world, but experts say its infrastructure is crumbling. The population of the US has more than doubled since the 1960s, when most of the country's major infrastructure systems were designed. Today, 1 in 4 bridges are deemed deficient. The latest report from the American Society of Civil Engineers gives the US a mediocre C- overall. The organization warns the situation is critical.
Families are losing thousands of dollars a year in disposable income as a result of cities having to fix potholes, people getting stuck in traffic or due to repairs when a water line breaks or the energy grid goes down.
The dire situation of the country's electrical grid was highlighted by the recent crisis in Texas. Extreme winter storms caused mass blackouts, leaving millions without power or water for days. As well as posing a safety risk, poor infrastructure undermines the economy. The World Economic Forum ranks the United States 18th worldwide in broadband coverage, with rural areas particularly poorly served, handicapping businesses. While the US Transport Association asserts that problems caused by the nation's poor airports alone cost the US around $35 billion a year.
It was supposed to be the next big player on the London Stock Exchange, but the food delivery platform Deliveroo has failed to impress in its market debut. Shares fell as much as 30% in the early moments of trade, settling down a whopping 26%. That is the biggest first-day slump for a major London debut on record. Demand for Deliveroo shares was hurt after leading UK asset management firms decided against investing in the IPO, citing concerns about working conditions and the gig economy business model. Let's look at the rest of the day's trading action. Stocks in London were dragged down, losing about 0.8% at the close. The CAC 40 down about a third. The DAX fairly flat in Frankfurt as inflation in the Eurozone rose more than expected in March. Wall Street has rebounded from a tough few sessions. The tech-heavy Nasdaq gaining about 1.5% at the close. The S&P 500 hitting a new high. The Dow Jones closing just in the red. U.S. private sector firms added over 500,000 jobs in March. That's the fastest growth since September. H&M has reported losses in the 3-month period from December to February, but what's really making waves is the Swedish retailer's statement about China. Along with other international brands, it's been facing calls for boycotts among Chinese customers and even saw some of its shops shuttered this past weekend for past declarations in support of the Uyghur Muslim minority in Xinjiang province. H&M, Nike, Adidas, and other fashion firms said they wouldn't be using cotton that was sourced from the province because of concerns about forced labor. Well, on Wednesday, H&M indirectly addressed that backlash, saying it remained committed in the long term to China, which it described as a very important market. The statement continued, "We want to be a responsible buyer in China and elsewhere, and we're building forward-looking strategies, actively working on the next steps with regard to material sourcing, but very explicitly not mentioning Xinjiang or the Uyghurs, in contrast to a much more pointed statement which prompted all of this backlash. And Monty, consumers in China aren't so sure about this apology. They're saying they expected more, and they really want H&M to backtrack on its criticism. Beijing, of course, denies any maltreatment of Uyghurs.
Okay, Kate, thanks so much.